Mackintosh, Head of Research at King Sturge. Thank you for joining us. You launched a report this week into South Wales. Can you tell us what conclusions you reached in that report?
There's a lot to go for. It is a tough market. Parts of South Wales doing okay, along the M4 is doing all right, but up in the valleys it's very, very tough. What we were talking about is not just how the South Wales and North Wales economy is going, but also how the Welsh Assembly government have been quite proactive in promoting new ideas to get joint ventures together to get private investment back into South Wales. Historically, the Welsh have done quite well. They've sort of kind of bucked the trend. Industrial Great Britain, as we know, last 20-30 years has suffered a lot through restructuring, and Wales has generally been quite clever in getting inward investment, and they seem to be up to that game again, winning perhaps more than their fair share and getting investment back into Wales.
And it might not seem like a logical link, but you went straight from South Wales to Eastern Europe today, I understand.
Well, there were similarities, to be honest, because all markets are going through this quite sort of traumatic period. Well-let investments, where there's good income flow, there's a lot of money out there that wants to buy, wants to invest, wants to develop if it can. That's risky. But if it's not let, or it's they can't find a tenant, you've got a totally different market, because you've got these two markets, one doing moderately well and the other is a disaster. And whether you go to Eastern, Central, Southeast Europe or you go to South Wales, you've got the same dilemma that the investment money will chase the income. If there's a good rental income, the stacks of it there, absolute stacks of it. The world is awash with equity finance. It doesn't know what to do with it. And whether it puts it in the stock market or whatever, it's looking for opportunities. But in a recession, and we are in parts of Europe still in recession, parts of Hungary may be still in recession, for example, parts of South Wales still in recession. It's going to be really tough because rents are soft, getting softer. Occupiers are just not there. If anything, they're regrouping, not taking space. It's going to be really a two-tier market all over Europe.
And on the subject of investment across Europe, what do you think we can expect from the banks in the next 12 months?
Very little. I mean, the banks will talk a good game and they are sorting themselves out, but they have two big problems. One is that they are trying to rebuild their balance sheets. They haven't got a lot of money to lend. Where they do lend, and I asked them at this Southeast Europe discussion we had over lunch, I said, well, look, give us, what is the risk premium you put? How many basis points do you put onto investment? And it ranges from 400 or 500 basis points up to 1,000 basis points, so 800, 700, whatever, over bank base, before they lend. And without mentioning too many people, EBRD, two banks, they're all, so the range is enormous. So they'll lend very, very cautiously. They'll lend because they haven't got very much money to lend, so they can only lend a little. But secondly, if they had the money, it's very difficult to find good investments because nobody's out there. The market's not growing, so they've got to be very careful what they do with their money, because there aren't just aren't the opportunities. I mean, we are in recession or coming out of recession, but there aren't that many opportunities to lend, even if they did have money.
Angus Mackintosh, thank you very much.